Happy Friday out there, folks. This is Darius Dale here to present our macro minute for Friday, July 15th, 2022. Starting with asset markets, we have stocks up this morning, commodities mixed, crypto up, dollar down, global bond yields down, market moving headlines. So what happens after OPEX? At about 1.9 trillion of options expire today, obliging investors to roll over existing positions or start new ones. Goldman estimates about 925 billion of S&P 500 linked contracts and another 395 billion of derivatives on single stocks are expiring, which can spur gyrations in underlying securities. Deals a short gamma, so more than likely that they're buying a lot of those short delta hedges back. So that's obviously why we're seeing such intraday volatility from the lows intraday this week to the big spikes into the close. Those dealers buying back those hedges, et cetera. There are signs of demand for options hedging is waning as money managers cut equity exposure. We're seeing that in depression of skew, the underperformance of fixed strike volatility, the underperformance of the VVIX, and then the decline in the VVIX-VIX ratio, which itself is more of a function of the decline in the VVIX than it is rise in the VIX. So a lot of signs are pointing to us that just positioning across the broader buy side is light, and for obvious reasons. We're hitting a severe liquidity cycle downturn that may ultimately materialize into a severe profit cycle and growth cycle downturn, i.e. recession in both. Cash is king still. So in the week through July 13th, global equity funds had outflows of 2.9 billion, with U.S. stocks seeing their first redemptions in 3 weeks at 1.6 billion. This is BofA citing EPFR global data. Global bonds attracted 1.6 billion, while 15 billion flowed into cash. So we're seeing cash continue to be king here. We've been, pounding the table on cash as a risk managed asset, really for most part of the year to date. And that's been a good position. Cash is certainly yielding a lot more than it had been on January 1st. Passive inflows are starting to dry up on the other side of this because, again, cash is now a legitimate alternative. So you have BlackRock clients showed the amount of money they poured into its long-term funds, these are the target date funds, et cetera, declined. So net inflows into these products totaled 69 billion in Q2. That's a whole 40 billion less than analysts expected. So a significant decline in passive flows relative to expectations. BlackRock's assets under management, which topped 10 trillion for the first time at the end of last year, has tumbled back to 8.5 trillion. So we're seeing all that sort of cash on the sidelines. It's definitely probably still there as evidenced by the EPFR data. But again, it's evaporating elsewhere and then the other side of the household net worth calculus. Big movers this morning at WTI crude oil bouncing 2%. It's down off 16% month over month. Got NASDAQ 100 up 1% into OPEX, up 5% month over month. Ethereum up 3% to up 5% month over month. Crypto continues to be still quite highly correlated, although correlation has decoupled a little bit in recent weeks, but again, still very highly correlated. And I bet if there's another 10 to 20% leg down in the NASDAQ, it's taking Bitcoin with it. So be careful out there, my crypto friends. Shifting gears to our volatility adjusted momentum signals and probable ranges. US dollar here still bullish VAM, still overbought. Gold bearish VAM, still oversold here. 10-year nominal treasury yield bullish VAMs, closer to the lower boundary of its range than the upper boundary. High yield bullish VAMs, same deal with credit spreads. Sorry, it's high yield credit spreads, closer to the lower boundary of the range versus the upper boundary. S&P 500, that is still neutral VAMs here. Got about 3% of downside, 4.7% of upside. VIX neutral VAMs, more or less in the middle of its probable range. NASDAQ 100 bearish VAMs. You got about 2.5% of upside versus 6.4% of downside. Neutral VAMs, Russell 2000, closer to the lower boundary of its probable range with 3.7% of downside, 6.1% of upside. Bitcoin bearish VAMs, very close to the upper boundary of its probable range with 3% upside versus 15% of downside. Ethereum bearish VAMs at the upper boundary of its probable range with 22% of immediate term downside. So be aware of that heading into the deeper part of July. Shanghai Composite bullish VAMs deeply oversold here. So they had a big sale this week. We talked about that in great detail on all the different puts and takes from a growth cycle and liquidity cycle perspective in China in today's leadoff morning notes. So if you want that, the revised deep dive there, to go check that out. Bullish VAMs, WTI still breaking down, still oversold. But again, things been oversold really for the better part of a month. That tells you that there's something afoot here in the energy markets, in the energy story. The supply picture is what it is, but the demand picture is evolving quite rapidly, and it's evolving to the downside. Agricultural bearish VAMs, that's in the middle of its probable range there. Industrial metals bearish VAMs. Now it's oversold with 12% upside. But again, this thing hasn't touched the upper bound of its probable range since probably late May. So let's just be aware of that. So with that, Darius Dale presenting our macro minute for Friday, July 15th, 2022. Best of luck out there and have a great weekend. We'll catch you back here on Monday.